What is up, YouTube? I'm back with another video. Finally back. I was pretty inactive due to me, being sick. I was going through it. I was like sick for like 2 weeks, 3 weeks. I was pretty sick. So I'm just now getting back and recovering. So I had a lot of things planned for y'all, like dropping my strategy video. I'm still gonna drop that later on, sometime this month or next month, early next month. But yeah, right now I'm gonna just drop more videos helping you guys improve your trading skills. So videos such as, how I find my support and resistance, how I draw my trend lines, the type of fib I use, how I use my fibs. So I'm gonna be dropping a lot of videos like that to help you guys improve as traders. So for today's video, I'm gonna be talking about market structure. Market structure is, to me, the most important topic and skill to have when trading Forex. Every strategy, I wouldn't say every strategy, but 90% of strategies are based off market structure. So you have to know market structure if you want to excel as a Forex trader. Things then start getting better for me once I really started to, lock in and focus on understanding how the market moves. So market structure is very important. So that being said, let's get into it. So we know the market has uptrends, downtrends, and consolidation. So those are basic. Those are basic. So I'm not gonna go too in depth into that. But what we need to know is what an uptrend or downtrend consists of. So an uptrend consists of higher highs and higher lows. So I like to think of it as a staircase going up. So an uptrend consists of higher highs and higher lows. That's what you have to memorize. All right. So higher highs and higher lows. So why is it called higher highs? So if you look here, think of the peaks as being the high, because it is. Think of the peaks being a peak of a mountain or something. You know how mountains have peaks? So I think of these as peaks, which are aka the highs. And then the bottom I think of are valleys, which in Forex terms is called the lows. So a mountain has peaks and valleys. So my peaks are highs and my valleys are lows. So that's how I look at it. So if you look at this peak / high here and compare it to this high here, you see that this high here, the one that I circled, is higher than the previous one. And if I go on and on, same thing. This peak here is higher than the previous one. So the market is just stepping up and the highs are getting higher. Now, let's look at the low, higher lows. So compare this low / valley, however you look at it, with this low here. This low, the one that I'm circling here, is higher than the previous one. And now this one is higher than the previous one also. So the highs are getting higher and the lows are getting higher. All right. So hopefully you guys can understand that. Just, it's in the name. Higher highs, higher lows. The highs are getting higher. The higher low, the lows are getting higher. All right. Also, with that being said, downtrends make lower highs and lower lows. So the downtrend is just the opposite of the uptrend. So let me go back to the uptrend. So in order for the trend to continue going up, that higher high has to, continue until, structure is broken, which we'll get into. So in order for a market to continue going higher and higher, you have to get the higher high and higher lows. Now, the same is said, but in reverse for the downtrend. In order for the market to continue going lower and lower, you have to have lower highs and lower lows. So it's like you're walking down the staircase. So if I draw this, let me just draw a downtrend. All right. So this is a downtrend right here. So just like the mountain example I told you, my highs are here. All right. My highs are on top. My valleys or lows are on the bottom. So downtrend is called lower highs and lower lows because if you look at the high here, let's label this 1. Let's compare number 1 to number 2. Which one is lower? Hold on, let me fix that. Which one is lower? 2 is lower than number 1, right? So this is a lower high. Now let's compare 3. 3 is lower than number 2. And 4, same thing. All right. So the highs are getting lower and lower. So here, let me do this as well. 1, 2, 3, 4. It's the same thing. It's the same thing. All right. So 2 is lower than 1. So the low is getting lower. 3 is lower than 2. 4 is lower than 3. So the lows are getting lower. So we're having lower highs and lower lows. So this is one way of identifying the trend also. And this knowing market structure will help you know when to take your setups, when to sell, when to, buy, all that. So let's say I want to buy the market. I want to buy once the market is making that higher low. These are good areas to buy. You want to buy when the market is making a higher low. And I'm going to get into that, like how I get in on these setups. All right. And then vice versa. You want to sell at lower highs. If you didn't know market structure, you wouldn't even know, like, oh, am I at a lower high or am I on a lower low? If you sell on a lower low, you're going to be in drawdown. So let's say you sold here and you sold like right here. Then the market decides to do a pullback. The market is never going to go all the way up in one direction without coming down. Market has to come down or up, depending if you're in a downtrend or uptrend. The market has to pull back. All right. So with that being said, let's say you sell here on a lower low, the market decides to pull back. You're going to be negative and you're going to get scared and pull out and potentially lose that trade. When if you sold here, you're not really seeing any drawdown. So you could stay in this trade and make all this money when the market drops to continue pushing down. So knowing market structure helps you, it helps you get in at better entries, and it helps you kind of predict the market, where the market's going to go. All right. So I'm going to show some examples of like market structure, me labeling my higher highs and higher lows. All right. So here we go. So if you're watching this right now, you could just pause and you let me know. You could try and label whether we have higher highs or higher lows, or lower highs or lower lows, and if we're on a downtrend or uptrend. All right. So if we look here, for those who are newer at this, it may be harder for you to identify your highs and your lows. I know some of you guys probably are advanced and already know this, but for those who this is new to, don't worry about it. With time, your eyes will adjust and you'll be able to see, the highs and lows way better. It's called repetition. Just keep looking at chart, keep putting in that chart work, and your eyes will adapt. All right, so moving on. Right here, we have a downtrend. It's clear as day. You look left to right, you'll see that we're moving down. All right. So since I know that, also we're going to talk about break of structure in my next video, which is my favorite topic, because that's pretty much kind of my strategy. So yeah, I can't wait for that video. So looking here, we're going to label our highs, our lower highs, since we're on a downtrend. All right. So I'm going to just focus on this area right here for now. Then we're going to mark our lower lows. All right. So we got our lower highs, and you see that we're stepping down. So this should already give you a sell bias, telling you, okay, we're only looking for sales. So by the time we're here, let me erase some of this. So by the time we're on this, let's say but by the time we're here, we should already be like, okay, the market went down and it starts to pull back. And now it looks like it's continuing down. This is on a 4-hour time frame. I'll teach you guys how to scale in. But for this example, once you see this pulling down, you can see, okay, this is going to be another push. And then look what happens. So we had a push down. And since you know the trend, you know that the market needs to make another lower high. Once you see that the market stopped here and started pulling up, you should start to think, okay, since we're on a downtrend, I know downtrend makes lower highs and lower lows. Okay, so this is potentially a lower high that's forming. So you see the market come up, and the market looks like it's starting to start selling. This could be your entry reason. And you could sell, you would have made this is probably over 100 pips. Yeah, just from long that. Same thing here. Now, when you're looking for the highs and the lows, where many people go wrong is they try to focus, let me zoom in. They try to focus too much into details. Like they'll probably focus here and be like, okay, this is a high, a lower high compared to this and this and that. This is a low. This is a high. They start to focus too much into details. Me, I don't trade like that. I look for major, like big structure, noticeable structure like this. I like to look for like stuff like this. I don't look like too in depth into certain things. So my advice would be to not pay too much attention to like, it depends like what time frame we're on. I like to look for structure on the 4-hour time frame. But same thing applies even on the 5-minute. Look for like the major structure. Don't look for the stuff in between, like here, because then you'll just be confusing yourself. So look for the major structure. So I'm gonna look for more examples. Let's just analyze this. All right. So market structure. All right. So we look here. We see we had a low, right? We had a low, and let's compare this low to this low. This is a higher low, right? HL, higher low. Now let's compare this to this. Another higher low. So we know we're on an uptrend. The market is trending up. Another higher low. Consider this a low. This could have been another higher low. All right. So practice looking at the chart and identifying these structures. Let's look at the highs. This is the high here. This high. Number 2 is higher than number 1. Here as well. 3 is higher than number 2. And it's going high. So it's moving higher and higher. Now, once we get that break, this is a key indication that the market may reverse. And this is how you could catch a nice entry on a long-term trend. See? So let me just quickly, even though I'm not talking about break of structure yet, but let me just show you why identifying breaks of structure is important as well. So let's say we were on this uptrend, right? So we got our higher lows, or higher low, whichever one you, some people may consider this to be a higher low. I probably would have put my higher low right here because this is higher than this. And it's more structured to me instead of this is like a small area. So this to me would be a better higher low for me. All right. So let's say we had a higher low. Look what happened. The market came below that higher low, therefore breaking structure, retest it, and sold. So let's say you got in on the retest, you would have been able to stay in this trend for a long period of time and catch a bunch of pips. You could have potentially caught over 260 pips just from knowing that. So once you continue to practice and look at the chart, just come on the chart every day or 3 times a week and look at the chart. Try to identify the highs, the lows, the lower highs, the lower lows, the higher highs and higher lows. And your eyes will adapt. And then you start adding support resistance to your knowledge on market structure. Another one here. Another example. Moving up. And what? Market starts to break. Break of structure typically means a potential trend reversal. What happened? Market reversed. So many people don't attempt to learn this because they think it's hard. Anything new is hard. Trying to learn a new language is hard. But the more you practice it, the better you get. So if you just lock in, focus on actually understanding market structure, trading really becomes easy. Because that's when everything clicked for me. So understanding that will really, really help your trading skills improve. So just to quickly recap, uptrends consist of higher highs, HH for higher highs, and then higher lows. So uptrends consist of higher highs and higher lows. Downtrend consists of lower highs and lower lows. All right. So, and remember not to focus on the small areas that are on the chart. Look for the major structure. Major structure. And sometimes you won't be able to identify the higher highs or higher lows. That's okay, because most of the time the market is consolidating. All right. So if you can't see it at first, it's okay. Just keep practicing, keep looking at the chart, and it'll come. All right, like stuff like this. Pretty confusing, right? All right. If you can't really understand this, it's okay. Just stick to what you could see. If it doesn't make sense to you, just move on. Go to another pair. Because most of the time, market is consolidating. Stuff like this, right here. Consolidation. All right. So most of the time, market is just moving sideways. All right. So that's it for this video. I will be dropping a part 2 explaining breakup structures. It's my favorite topic. So I will definitely be dropping that video soon. So stay tuned. See you guys in the next video. I'm out.